presentation on the second topic of our assignment. That is whether it's a good idea to implement the negative OCR in the current situation in New Zealand. Generally, we are going to against this proposal study by introducing what is OCR and why negative OCR. Then we are going to focus on the disadvantages of negative OCR and what would happen if we are implementing negative OCR in New Zealand. First, let me introduce what is OCR. The official cash rate is the interest rate set by the Reserve Bank in the dual mandate serviced by the remit to the Monetary Policy Committee. It influences the price of borrowing money in New Zealand and provides the Reserve Bank with the means of influencing the level of economic activity and inflation. The reason why the OCR may become very low or even negative is because New Zealand managed the COVID-19 crisis with the OCR just 1%. This still will obvious the less room to lower. Lower borrowing for business and households stimulate the economy of New Zealand, and negative OCR reduces domestic foreign exchange rate, which is good for exporters. However, there are so many disadvantages for implementing OCR in New Zealand, so we decide to against this proposal.
Disadvantages of negative OCR. First, a reduced domestic foreign exchange rate could boost inflation as importing cost increases. Second, negative OCR will influence the market interest rate and maintain it at a very low level. Further, potentially push the market interest rate into negative, which narrows the margin that financial institutions could earn from lending. Third, negative interest rate decrease the quality of borrower in the public, as it lowers the cost to borrow, which could potentially lead to an increase in non-performing loans in the bank. Fourth, negative interest rate means people are getting charged to deposit. In order to avoid that charge, people may choose to store extra notes instead. Eventually, banks might suffer losses and decide to reduce the flow of credit within the economy. Further, may cut off the money supply of the country. What would happen if New Zealand implemented negative OCR? Funding structure of bank. Negative OCR may disrupt the performance of the banking system, thereby disrupting the supply of credit. For example, the consolidated balance sheet of all banks as at 31st March 2020, reported by the RBNZ, shows that deposits takes up to 60% of the liabilities and equity. 75.8% of the assets are loans and advances, and only 0.2% are cash. This suggests that if there is an event of bank run, New Zealand banks has no ability to supply the withdrawal. Pressure arising under negative OCR. A negative OCR can hamper the banking system, but it also has the potential to generate a big economic impact. For example, Sweden's interest rate was increased to 0% in late 2019 from negative 0.25%, which was the end of a 5-year run of negative interest rate. If a negative OCR is implemented, New Zealand may face the same problem as Sweden. Long-term negative OCR might reduce the public confidence in the national economy, and the bank deposit may continue to drain. In the long run, the New Zealand economy will enter a downturn.
The negative OCR environment as a return on low-risk assets decrease. The relative returns of risky assets are more attractive to investors. Investors are incentivized to rebalance their investment into risk assets. Potential of negative interest rate has led to a different interest rate and has a strong positive impact on all asset price. People are more willing to invest into other things rather than the deposit into banks. For example, stock market price would increase as competition increased, when market interest rates decrease or move to negative. People with mortgage and other loans may experience lower interest payments or even receive money from the banks. This affects the asset quality of the banks, and the income generating ability of the asset has decreased or has become a liability. Negative OCR could benefit New Zealand economy by lower costs for small and medium enterprise and households to borrow, improve debt holders' cash flows, stimulate money supply in the economy. However, negative OCR once entered is expected to be maintained for a long period of time, and COVID-19 will not go away in the next few years. In this case, interest rates may go near zero or even negative. It puts too much pressure on the banks and loan providers, and they barely earn from their assets. This may also reduce the consumption and investment by households and firms.
Thank you so much.